Welcome to all of our friends joining us as participants on the Blueprint Nebraska Tax Modernization Press Conference this morning. We do very much appreciate your attendance today. This is a virtual press conference that will be recorded for later viewing. And we will send out links to everyone participating in the press conference today about those links and how you can find this at a later time. The format of today is that we are going to hear from a group of panelists to talk about tax modernization in Nebraska. And I'm going to introduce those participants here shortly to you. When we finish our remarks, we're going to go to a Q&A. And we do want to give preference to Senator Linehan. She does have to check in on the floor of the legislature a bit later this morning, as will some of her other colleagues that are with us. So any questions directed to Senator Linehan or her colleagues, we're going to move those to the top of the Q&A, and then followed by anyone with the media or any of the tax associations that are with us today. We will also give you preference, but we would like very much to hear any questions from anyone that's on the call with us today. Let me start by just making a few brief introductions that you will be hearing from these individuals here shortly. Mr. Jim Greisch. Jim is a national industry leader for financial services with RSM. Jim, if you are familiar with business leaders in Nebraska, Jim is a very prominent business leader in Nebraska. He's been very much at the forefront of tax discussions over the years. And he has worked with Blueprint Nebraska, heading up a small team to build a framework for tax modernization. Exactly what does it look like? What does it include? What does it not include? And he will be assisting in coming months with the tax modernization effort under Blueprint Nebraska. We also have David Bernori, Senior Director with RSM, another association with RSM. But David is also, and Professor Bernori, I should say, is also Research Professor of Public Policy at the George Washington University. And David serves in a advisory role with Blueprint Nebraska's tax modernization effort. And then we have Senator Linehan. Senator Linehan was elected to the legislature in 2016 and re-elected in 2020, and she chairs the Revenue Committee of the Nebraska Unicameral Legislature. And Senator Linehan, I see you have at least one colleague that's on with us. Would you like to make a brief introduction of that colleague, and then we will move into just a brief introduction of Blueprint.
Thank you, Jim. I think Senator Tom Breezes is with us. Senator Tom Breezes serves is my right hand on the Revenue Committee. We've both been on that committee for 2 years. He's also chairman of the General Affairs Committee, and he's a very important and productive member of the legislature. Thrilled that he's with us this morning.
Thank you, Senator Linehan. And Senator Breezes, I had a chance of serving both with Senator Linehan and Senator Breezes when I was in the legislature. Senator Breezes brings a great perspective being in the agricultural segment of our economy, as well as a state senator and an attorney. So we welcome Senator Breezes to be on the call with us, and it's very possible we may have other members of the Revenue Committee joining us as we move through this program. So let me, for just a little background, we do have a number of people on the call with us today that may not be familiar with Blueprint Nebraska, exactly what it is. And this was an initiative that was developed, imagined and developed by statewide business leaders in 2018. In 2019, we produced a report. That report is in a booklet format, but you can go to blueprint-nebraska.org, blueprint-nebraska.org, and read that report in its entirety. It focuses on 15 significant key initiatives that we believe we need to work on in Nebraska in order to be competitive with our peer states and on a national scale. And these are initiatives that are well within our reach. They're bold, they're certainly bold, but they are well within our reach to accomplish things that Nebraska has as a background to each of those initiatives. But underlined on chart that I'm sharing with you, you will see that realigning Nebraska's tax strategy is one of those 15 significant initiatives. It's only one, but it's a very significant part of this plan. And I'm going to explain to you just a little bit about why that is before I turn it over to the other folks that are on the call with us today. So let's first look at individual income tax, and I'm going to give credit to the Tax Foundation for the rankings that you see up in the top left-hand corner, the Tax Foundation state rankings. Also, I want to give credit to the Tax Foundation for putting out a report in February. It's worth looking at. It's entitled The 13 Priorities for Pro-Growth Tax Modernization in Nebraska. It's a great opinion piece and an interest piece to tax modernization. But I will tell you that the Tax Foundation is not represented necessarily in any of the information that you're going to see in this call today, other than some of the data points that we're sharing. So individual income tax of Nebraska ranks 21 on their scale. However, if you look at the progressivity of Nebraska's income tax, you will see that we have, I would like to call, a supercharged progressivity of individual income tax. And based on that progressivity, most competitor states are in a better position than Nebraska for talent attraction and business investment. Along the top of that chart, you will see who we consider to be our peer states or competitor states for comparison purposes. You'll see that also in the Blueprint Nebraska study. So you can look at the top individual rate, you can look at the top individual bracket. Sometimes that's a little bit confusing, complicated, but if you look at the progressivity, you'll see that other than Minnesota, Nebraska is the most progressive of these states. And the single earner gets into that top bracket at $31,000 a year. So if it is a goal of our state to naturally grow wages, to create higher paying jobs, and to create a STEM pipeline into our state's workforce, we absolutely must address and change the progressive income tax practice in Nebraska. The bottom two charts, also giving credit to Tax Foundation for these charts, you will see Nebraska's effective income tax rate for top decile is nearly triple that of the bottom 7 deciles, and also that the top 10% of income earners pay more than half of Nebraska's individual income taxes. So that, again, points to that progressivity and the progressive nature of the individual tax structure, income tax structure in Nebraska. If you look at the corporate income taxes in Nebraska, we rank 32, but 3/4 of our competitor states have less corporate tax burdens than Nebraska does. So when you look at that number 32, that means there are 31 states that have a lesser tax burden on corporations than does Nebraska. And then property taxes. You will hear property taxes discussed a great deal in Nebraska, and this ranking tells you exactly why that is. We rank 41st among the nation, and 100% of our peer states have less property tax burdens than does Nebraska. So whether you look at it in terms of property taxes per capita, or you look at property tax burden as defined as personal income versus property, you're going to see that property tax continues to be a major issue for taxpayers in Nebraska. And then we move to sales and use tax. We don't look too bad when it comes to sales and use tax. And however, we have a very narrow breadth of Nebraska's sales tax base. And that is because we have a great number of exemptions. So when you hear modernization discussed, you will hear the discussion around broadening our tax base and addressing the exemptions. We want to be careful not to tax business inputs. We want to encourage business growth, so we have to be very careful the way we address those exemptions. And that takes me to what one of the things that we will be doing later this year after this press conference and latter part of this legislative session is we will be working with econometric modeling on a regional basis, looking at these peer states and comparing ourselves against them and looking at the interplay between our economy and their economies, particularly as it comes to removing exemptions and adjusting corporate and individual income tax rates. So the modeling is absolutely critical to be able to give us some indication of the outcomes of making adjustments to our tax code. And you will be hearing more about that modeling effort as we progress in this legislative session and into the interim. At the bottom of that chart, you will see a little bit of an illustration as to why the sales and use taxes in Nebraska are really tied to a 1960s tax code. So goods have declined as a percentage of total personal consumption nearly 30% since the 1950s. However, in 1960, when our tax code really last underwent a significant change, you will see that services have overtaken goods as a percentage of the economy. And that's really not reflected in the tax code of today in Nebraska. And then Nebraska's sales tax base continues to decline, and it has declined by nearly half since 1970. Again, that points towards the underlying problem that we have in Nebraska around the narrowness of the sales tax base. And so with that, I'm going to invite Jim Grice to talk through a little bit about tax modernization framework that he and his team have been working on. And so Mr. Grice, I'm going to turn it over to you.
Thank you, Jim, and good morning, everyone. Thank you for inviting us to join you this morning for this conversation. You know, the challenges that our committee has had reflect the changing nature of our economy. As you think about, you know, where we've been since 1967, our tax policy has been in place, and it reflected the choices of the day that were present at that time. Our economy looked very different than it does today, and requires that we think about the way we are competitive and attractive to the workforces of tomorrow. So as you read and hear more about our work, recognize that what we're trying to do is balance and attract three types of important capital for the effort of growth going forward. Of course, we need human capital. I don't think there's anyone with whom we've had any conversation that would disagree that we have a people problem. We just have too few people, so we have to create attractiveness for the humans to reside here to become the workforce of tomorrow. We're looking for economic capital, the things that put people to work, the investments that are necessary in order to grow our economy. Then we're also looking for the intellectual, the innovation capital that will stimulate the economy of choice going forward. And as you've heard from Jim, the movement from goods to services reflects the very nature of the choices that were made in 1967. We have an over reliance on property taxes, land, buildings, and equipment were the capital of the day in the 60s, and they were necessary in order for us to achieve our desired growth patterns. But they are not the same today. So we have to take a good hard look at our property tax structure. We have to consider mechanisms by which to make the property tax system sustainable. We have to provide an appropriate amount of balance in the system to relieve some of the burden today. That's going to require that we think about methodology. It's going to require that we think about budgetary and other rate limitations, and we're going to have to provide greater transparency so that the nature of the property tax burden is understood by more of our population. We have to simplify our income tax growth. There's some interesting studies that have been published over the course of time that show almost every state with a zero or a very low tax burden, income tax burden, has grown during the last 5 to 7 years. We have to create a system that treats all taxpayers in a comparable manner. And of course, we have to protect those in our economy who are the low income earners. We surely cannot shift any burden down into the lower income levels. Our corporate tax rate has to be set as low as possible, and we know that the business entity structure choices that are available to our our investors, and our business entrepreneurs have to be balanced, in the manner in which taxes are paid. We can't incent one form of operation over another. So we're going to look very hard at how we create balance within the system that treats C corps and pass-through entities in a comparable manner. And then, as you heard Jim Smith describe, we are taking a strong look and a deep look at our sales tax base. All the studies that we have been provided to date clearly indicate that over the course of time, the shift in our sales tax system and our outputs needs to be reformed. There's no question that modernization in the sales tax base and the mechanism by which we identify the things that should be taxed has to be updated to reflect the economy of today. We intend to use an academic analysis to determine the pieces of that sales tax base that need to be reformed. I want to be very clear. We have no interest in taxing business inputs. Business inputs will remain off the table. We have no desire to create any form of a value-added tax system. Indeed, our goal is to create economic competitiveness, and our desire to expand, modernize, reform the sales tax base simply reflects the changes in the state's economy and the way consumers buy goods and services, most notably services. Personal consumption is going to be the driver. There are an ample number of occasions in which we've heard from experts talking about the need to have consumption-based systems. We need to refine the pieces of our policy that are in that consumption-based system. And we know that we have to make choices that reflect all of the good things that Nebraska has in its workforce, in its human capital, and its intellectual capital. And that, of course, includes making sure that we haven't burdened any one of these pieces of our policy with an undue burden. We certainly look for an opportunity to create a competitive environment that makes Nebraska's economy stronger going forward and makes it attractive for people from around the country to relocate their businesses and their families here to Nebraska to experience the good life as we know it firsthand. With that, I'll return this to Jim Smith, and I think we're going to hear from my colleague David Brunori a little bit about modernization theories.
Thank you, Jim. Good morning, everyone. It's an honor to be joining you today, and I want to thank Jim Smith for inviting me, and it's particularly an honor to be here with Jim Reich and Senator Linehan, who is refreshingly, I've worked with a lot of legislators in over 30 years, and she is refreshingly forward-looking in her approach, and I appreciate that, and I hope the folks in Nebraska do as well. I'm going to spend a few minutes talking about state tax policy on a national level, and as I said, I've been teaching and writing about this for 30 years, and the main point I want to make is that state taxes matter. And the evidence is very clear that firms and increasingly people make decisions about where they conduct business or live based on tax burdens. Now, I caution that taxes are not the only thing, right? Businesses care about access to market and labor costs and lots of other issues, business regulation. And there are a million reasons why people live where they do, but taxes increasingly matter. It is not a coincidence that states like Tennessee and Florida, Nevada, and especially Texas are booming. Those states have no personal income taxes and place modest tax burdens on business enterprises. There's lots of academic research to back this up. But I'll tell you, from a practical point of view, and I see this all the time, businesses do locational analysis to determine where to invest all the time, right? They have smart people, they hire consulting firms to figure out where the best place to work is. And the truth is, states that impose high taxes on business are at a competitive disadvantage nationally. And companies move their operations out of high tax states all the time. Look at Tesla recently. And you should ask yourself, how many of them are moving to Omaha or Lincoln? And that will tell you something, how many inbound companies are coming from out of state. This used to be a bigger issue for businesses than people. But in the modern economy, especially as a result of COVID, more people are working remotely. And if people can work remotely, they may choose to live closer to family, closer to grandma, or they may choose to live near the beach or the mountains. And Nebraska may be in trouble if they're choosing the beach. But higher income folks, and we know this, are considering tax burdens in determining where to live. And so taxes matter. Now, Nebraska, as Jim and Jim both have said, is a state whose tax system needs fixing. Blueprint Nebraska is calling it modernization, which is an apt term because the structure of the state's tax system was put in place a half century ago or more. And the system, I'll just tell you, the system perpetuates, in my opinion, bad tax policy. So you have relatively high corporate income tax rates and business tax burdens, and you have relatively high, certainly from a national perspective, personal income tax rates, and you realize that is not good. And you know how I know you realize it's not good? Because you provide a crazy quilt of incentives and credits to businesses and people, as if you're apologizing for some bad tax policy choices you made. We're sorry. Here's some tax breaks. But the overuse of incentives and credits are themselves not particularly good tax policy. So it kind of drives itself and perpetuates itself. Now, there's two big challenges to taxing businesses. First, it is difficult to effectively and efficiently tax mobile capital in a global economy. Okay? The blueprint slides that Jim Smith had up show comparisons, to South Dakota and Kansas and other states and Iowa, and that's fine. But I'm telling you, Nebraska is not competing with Kansas only. They're competing with South Korea and South Africa and the Cayman Islands and all kinds of places around the world. And capital moves. And we know that. Second, and something everybody should really, as people don't think about enough, is that in the modern economy, the incidence of business taxes in general and corporate income taxes in particular is not where most people think it is in terms of who actually pays the tax. Increasingly, much of the tax, if not most of the tax, is ultimately paid by labor in the form of lower wages and consumers in the form of higher prices. And that is something that is often lost on policymakers and advocates for higher business taxes. Now, nationally, the sales tax is at the heart of most tax reform or modernization efforts. And the ideal, and Jim Grice mentioned this, and there's no real debate about this from a policy perspective, is that the sales tax should fall on all final personal consumption, and the tax should never fall on business purchases. That's almost gospel. And there's a lot of sound reasons for both of these ideals. Happy to discuss them. There's a good discussion. The Tax Foundation paper on Nebraska is excellent. I would highly recommend it. No states, of course, achieve these goals, but the closer you get to them, the better off you are. Now, finally, historically, every state tax reform effort, and I've been involved in a bunch, recognizes that a sound tax system is built on a broad base and low rates. Nebraska generally gets that principle backwards, as do many other states, by the way. I'm not picking on Nebraska. Nebraska is not necessarily unique in this regard. But you have relatively high rates and narrow bases. And this principle is recognized nationally and historically as important for several reasons. One, it minimizes market distortions. When you have a narrow base, it is the government choosing who's taxed and who's not, right? That's government driven. And that is contrary to market economy creating those advantages. Two, broad-based low rates minimizes compliance and administrative burdens. Right, there's less to think about. It's simpler. And then finally, and ultimately, if it's done right, broad-based low rates will raise more revenue. You will actually collect more revenue than you did before, because you're going to be taxing things that are actually happening in the economy. And that's, if your goal is more revenue, that's actually a good thing. But you do it in a better and smarter way. So I'm going to stop there, Mr. Smith, and I'm happy to answer any questions folks have when they have them. Back to you, Jim.
Professor Bernori, great remarks. Thank you very much. And so Senator Linehan, I'd like to hear from you and share with us a bit of your thoughts on the tax situation in Nebraska and why you see modernization is so essential to economic growth and prosperity.
Thank you, Senator Smith, and thank you all. I'm not sure that it was fair that you have me following the Professor Jim. I feel outdone already. I do appreciate all of you being here. I agree, I think 100% with everything that's been said. We have fatigue here, I think, studying tax policy. We have a 1967 tax code with a whole bunch of patches all over it. And just as the professor said, it is, I don't know if I want to say it, I'm going to say it. It's like Frankenstein. We have an incentive package we passed first in the 1980s, 775, then in the early 2000s, we went with Nebraska Advantage. And then last year we did Imagine Nebraska. And we have to do them because our income taxes are so high and our corporate taxes are so high that if we don't have an incentive package, we won't keep business. It's not a good way to do it. And on top of the incentive package, and again, we did it last year, we have 3 patches to help with our property tax problem. We have the property tax credit fund, which goes out. I don't think 70% of Nebraskans understand how it works. We now have $275 million dedicated to it, plus the gambling revenue. So we use sales and income taxes to buy down property taxes, which is not transparent. Nobody knows, I shouldn't say nobody, but very few people understand how it works. And then people didn't understand that when we did more last year, we didn't put more in the property tax credit fund. We created a new ugly kind of patch that says you pay your property taxes for your schools, your general fund, and then at the end of the year, you get a deduction, which I heard from accountants all over the state of Nebraska. They don't like it. You take a deduction to get part of your property taxes back through your income tax. And then finally, that's at 125 million this year. Next year, it goes to 318 million. Ultimately, it's set to go to 375 million. And finally, we have the homestead exemption, which means that if your house is less than 175,000 and you're below 47,000 in income, you don't have to pay property taxes, which sounds like a great idea, but the state picks up the tab again right now, which goes up 5 to 6% every year. Right now it's 110 million. So we have almost $800 million in sales and income taxes we're using to buy down property taxes, and nobody's happy. So it's not, it is a mess. We have studied property taxes and income taxes. Since 1962, we've had the McClellan study. We had the Syracuse study in the 80s. We had in 2007, the Berlin Commission. And then in 2013, we had the Tax Modernization Committee. And they all said the same thing, which the professor and Jim has said already. We need to broaden the base and lower the rates. So we know what to do. So here's the good news. We have, it's good news because the governor and the legislature have done a great job in the last 3 to 4 years of holding down spending. And some of it's been helped by facts. So when we first got here, I think Senator Breezy and I are in the same class, we were $1 billion short. So we had to really tighten our belts. And then the next year we thought we were crawling out of the hole, but then came the largest natural disaster Nebraska's ever experienced with the flooding. So we tightened the belts again and kept our spending under control. And then last year, when we thought we might have some money, we got hit by the pandemic. So we've had 3 years of really belt tightening. And amazingly, Nebraska has done very well during the pandemic as far as businesses. Our revenues are up, way up. So we're in a situation where we have money to do something. And we're also in a situation where we have a governor in position who's been there for 6 years. He's got 2 years left. And we have a great deal of knowledge and expertise in the legislature. We have several senators, Senator Stinner, Senator Williams, Senator Groney, Senator Friesen, Senator Hughes, Senator Lindstrom, and I've got Senator Coulterman. I'm going to forget Hugh. That's not all of them. We have 12 senators. This is why the urgency is this legislative session. We have a governor with experience. We're going to lose at the end of this legislature 12 seasoned legislatures, many of who are chairmen. So we have a time frame here with the funding and the experience to actually put us in a much better position than we're in right now. And we should not, and I'm very thankful for Blueprint because it gives us that outside kind of resources and help where we can do the modeling and we can have some confidence of what we're doing. Because when you ask for change, it's very hard. And the legislature's unique and we have to be realistic. You have to get to 33 senators to do anything big, and big is hard. But the ugliness of our current structure should convince us that we need to move forward. So thank you.
Very good, Senator Linehan. Thank you for your remarks. I'd like to, again, remind everyone, we do have a few minutes for a few questions and answers. So please send us your questions and we will read those off to the participants or to the appropriate participant and receive their response. But now I'd like to invite Senator Breezy to share some of his thoughts. Again, a very thoughtful legislator, has been very, very involved with tax policy since his arrival in the legislature. And Senator Breezy, would you like to share some of your thoughts on this issue?
I want to thank Blueprint and the folks there for working to move this vision for Nebraska forward. And I especially want to thank Jim Smith for his leadership. And I want to thank Luann Linehan for her leadership of the Revenue Committee and her leadership on tax modernization issues. And obviously we have a lot of work to do, but I'm confident that we can get there. But I just had a couple brief comments on tax modernization. First of all, I agree with everything that was said today, and I could probably just quit with that and move on to the next person. But I did want to suggest, there are many moving parts to tax modernization. And one key component is modernization of our sales tax base. As others have indicated, we have an overly constricted sales tax base. We are navigating the 21st century with a 1950s era sales tax base. Sales tax base expansion will be critical to modernization. Again, the ideal sales tax base is a one-time tax on a retail consumer transaction. So it will have to be a thoughtful expansion with business inputs excluded, of course. And then somebody's going to have to land on a definition of business inputs. It can be an expansive definition or a fairly restricted definition or somewhere in between. And we're going to have to land on that definition. And then furthermore, as one compares our revenue streams in Nebraska and compares our rankings to other states, it's really clear to me that property tax relief and reform must be near the forefront of this discussion going forward. And so I certainly look forward to working with Chairman Linehan and members of the Revenue Committee and of Blueprint Nebraska to move forward on this issue. And I'm optimistic for success. Thank you.
Thank you, Senator Breezy. Appreciate it very much. And thanks for being with us today. We have the first question has come in, and it's for Senator Linehan. And I know your hearings are drawing to a close in your committee soon, if not this week. The question is, what do you see as the next steps in this process?
Tomorrow, we're going to have, we've got 3 what we call shell bills that give the committee the ability to create legislation. So tomorrow, we're having a hearing of which hopefully we'll have some people from Blueprint just to talk about the big picture. What is the problem and where do we need to go? And then I think the best way to move forward, and I feel I should give a shout out. I have an excellent committee. I mean, I could, like, if I got to come to the legislature the first day and pick the people on the revenue committee, it would look very much just like it does. So we have a good committee, and that committee, all of them have cross section. I mean, they're from all over the state and from every industry and every interest. So that committee needs to put together the bill with outside help from all the interest groups and all the people, all Nebraskans. We need to put together legislation that can move us forward, and then we need to go across the state this summer and sell it.
Thank you, Senator Linehan. The next question, I really wanted to give credit to Governor Ricketts and to the legislature for their efforts in controlling the spending in our state and really targeting the spending to provide the best services for Nebraskans. So with that as the basis for their question, they're wanting to ask, so how does that play in to the ability to have significant tax modernization? Are we in a better position today because of that, or in a worser position, or does that not matter? And perhaps that's to Mr. Greisch and Professor Bernori.
Well, from what perspective, though, Jim? I guess is my question. Better or worse?
I'm sorry.
Yeah, because I didn't catch the end of your question. I'm sorry.
So the efforts that the legislature and Governor Ricketts over the years to control spending, does that put us in a better position for tax modernization, really significant tax modernization, worse, or does it not matter?
Well, I will tell you from a national perspective, it puts the state in a much better position if you have your spending under control, right? Because then, the revenue part of it, the revenue matters obviously, and what you're, what ultimately you're going to end up doing. But if you have crazy spending and crazy increases in spending, and you want to keep it somehow revenue neutral, it makes any kind of modernization or reform honestly almost impossible. So modest spending, modest growth is the key, not only the key to good government in my perspective, but it's certainly the key to any kind of modernization effort.
Very good. Jim Greisch?
Yeah, I don't think there's any question that, spending theories also have to be modernized. We can't possibly continue to do the things we've done in the past and expect revenue to grow at an exponential rate. And that's both at the state and the local level. So, we have the thought processes about how to thoughtfully, spend what is necessary in order to service the functions of government is an essential component of success going forward. And I think the ground is better tilled today using our agriculture roots. We have a better opportunity today because we have focused on it. There's been an effort underway in many circles to find a balance in spending that reflects the priorities that are appropriate with the realities of raising revenue, on a smaller, narrow base. As I think David has said to me several times, if we do this correctly and the base widens, there might well be more revenue that's raised, and that'll give us a little bit of an opportunity to really have a thoughtful and informed conversation about the functions of government and what the priorities for our citizens are going forward, and on which the state should spend and local government should spend. So I'm more optimistic having had some discipline put into the system than I would have been before.
Right. Well, very good. We do have one more question for Senator Linehan, and I think actually this can be opened up to anyone, but how can Nebraska leaders help keep momentum and to build consensus on what can be a very charged issue?
I think that educating the public, helping us educate people as to where we are. I mean, going back to the spending, Senator Breezes has a bill that we went to the floor, filed yesterday on a 3% plus real growth lid on tax taking on local taxing entities. So what that means is 3% plus real growth. The real growth on statewide average is 9.8%, or 0.98%, excuse me, 0.9, wish it was 9.8, 0.98%. So it's really a 4%. Plus Senator Breezes, as he always is, very thoughtful. So he manages to let them carry, if they don't use it, carry it forward. But it's not, if we can get anything kind of established that 3% plus real growth, which is ahead of inflation, is a very reasonable request on local governments. Because if you have real growth, like in where I live, Elkhorn, which is, the growth is huge. I would guess it is 4 or 5% a year, plus 3%. So we're not asking people to do anything the state government hasn't done, and we're certainly not asking them to do anything that Nebraskans haven't done, because our taxes have outpaced our income growth significantly the last 10 years. I mean, it's dramatic. You've got taxes going up 3 or 4 times the rate of inflation. You just can't keep doing that. You can't do that. And people back, the one thing I didn't mention, you're absolutely right. People will move because of taxes. Seniors will move, young people will move. I've got 4 children. They're not all in that tax bracket. We're trying to a little more outside of it, but young people who we're trying to attract are very savvy. When they look to move, they go and they can just sit down at the desk at home and look at every state, where are they going to pay taxes, how many taxes they're going to pay, what is the cost of living, and we cannot keep pretending that we're going to hold people here by taxing the talent that we want to keep here in Nebraska.
Good. Would anyone else like to add anything to that? I'll hit on one last question here before we conclude, so that the senators can check into the legislative session today and for their hearings. The question is, explain more about the types of analysis that's required for modernization efforts in sales, property, and income tax, and exactly how will that be pursued. I did mention that in my opening remarks, and I'm going to invite Mr. Grice to maybe add his remarks on this effort as well. In addition to having multiple voices express opinions in this process, because this is a very big issue and it's very broad. It's as broad as the state of Nebraska. It really is critical for everyone in our state to see results. But how do we best measure the intended consequences and actually what could be the unintended consequences of making changes? And so that's why econometric modeling is really critical in this process. And so we will contract with a service provider to build an econometric model in which we will be able to run various scenarios to understand the interplay between our economy and the region's economy and our peer states' economies around various changes to our tax code. Now, granted, that is going to be but a singular data point in this analysis, but it does give directionally what can be expected as an outcome for any changes that are made. And you will see that emerge probably inside the next 4 to 6 weeks. And we want to be as transparent as possible. I'm making a commitment here that we want to share the data that we realize through that effort because we're all in it together. And that's actually what is behind Senator Linehan on her backdrop. We're all in this together. And so that's what we're going to do. Mr. Grice, do you have anything to add to that?
Jim, I really don't. The econometric modeling reflects the economies of the state and the various industries in which we have significant concentrations. The objective is to take it from coast to coast and border to border to make sure that no section of our state is unstudied or understudied. We understand that the different parts of our state are experiencing pain in different pieces of our tax policy. So the objective is to evaluate and then respond to those differences. So I think you've hit the nail right on the head. It's a dynamic model. It will take into account the consequences of the choices that are made in a balanced and thoughtful manner. But we have to be bold and principled in the manner in which we evaluate and assess the options that are available to us.
Absolutely. Well, any further discussion on any of those points? Any final remarks anyone would like to make? I see none. Again, Senator Linehan and Senator Breezy, thank you for your time today. I wish you well in your day in the legislature. This is going to be a short week, so looks like you're entitled here to a 3-day weekend, and you deserve it very, very much. Thank you for your hard work on behalf of Nebraskans and for your hard work on the Revenue Committee. Jim Grice, thank you for leading the efforts with Blueprint Nebraska, and Professor Bernori. It's always a pleasure hearing your remarks and helping keep us focused on how money really does walk. And so good tax policy is critical to having investment in Nebraska and being able to attract talent. And we know all states have a workforce issue, and we keep that talent in Nebraska and attract it to Nebraska. Keep an eye out for a link on the video of this press conference for you to be able to share with your colleagues, those that are in attendance. And again, thank you very much. Take a look at the Blueprint Nebraska study and take a look at the Tax Foundation study. With that, thank you very much. Good being with you today.